Picking up on where we just left off, looking at the August 6th end of day trading, that's today. We were just looking at a daily chart, and now we're looking at the thirds. These are profile bars, 135 minutes, 405 minutes in the day session, and each one of these bars then 1/3 of a day's trading. And we were just looking at the volume on this breakdown. An outside reversal bar the first third of the day on Friday today. On Thursday today. And the delta, much larger than what we had all of yesterday, and etc. So looking at the third of the day gives us a much faster appreciation of a trend turning than a daily, and it also can be very very predictive for locating our intraday levels. As you can see, if you look back, as each day gives us a value area high and low and a point of control. We're using the dark blue here. It shows we have this naked point of control here, which is a pretty close target at 985.75. So that point of control was never touched on any of these subsequent few days, and we can expect reactions if the market does indeed get down here at some point in the next week or so, or a couple of weeks, whatever. We can use these more fine-tuned levels to gauge the way the market's responding. But the 135-minute bars also give us a jump on looking at the delta. And for example, on this outside reversal bar here, it might have helped you have confidence on the rally way up off the low, which was right about up to 50%, back up to the high that was established in the morning. And there just wasn't any big increase in buyers, and nor was there any increase in volume, significant decrease in volume in fact on the rally. So there wasn't any indication that buyers were coming in to this market. So you see, even looking at a 135-minute chart can actually give you a very great ability to project a direction that this was not an uptrend, even though it had gone all the way from 990 to 998 off a low. An 8-point rally off a low for the past few months has been an indication it's never going to go back down. But now we're seeing the market willing to sell off with a little bit more enthusiasm, and that's what's showing up in the delta, which has been much stronger on the sell side than it has been on the buy side ever since July 30th. So by looking at the thirds of the day, we get an advance warning, so you can say this truly is a leading indicator, simply going to a 135-minute time frame to help you evaluate the daily. Now let's look at some other time frame. Now with this chart, you'll see that not only the E-mini, but a lot of other markets work beautifully on the market profile principles. They're really universal. And what's so valuable about, or what's a lot better about the futures than trying to trade the spot forex market, is you have transparency here. Every trade is monitored. You have accurate pricing mechanism and exchange regulated controlled pricing, and you also have exact volume. So you can have volume by trading the futures. You trade the Merc Euro or Yen or British Pound or Swiss whatever, and you then have an advantage of this very accurate market profile information. Now what I've got up here are the 180-minute charts that again will allow us to get a little bigger picture view of the euro, And you will see how effectively the market profile structure is on this time frame and on this market. Now, going back here to around the 20th of June, as the market was rallying in a somewhat consolidated mode, similar to what the S&P was doing for a while, you had this value area of from like the 20th of June till the end of June, and that was established, and then they probed back down to where they came from, a little lower, and didn't break or extend value too far, but enough to maybe give some hope for a few days that that might happen. And when they rallied up, again, that point of control that was established in this rotation, that held firm. They didn't even really reach it there, which gave them a little energy to try to go a little lower. But when it finally held, this point of control was the testing point for the subsequent rally off of this low. So they clearly held here. It was almost no closes below, only tails on the 180-minute bars. And now they're going to start dealing with this area of value and see if they can break it. They had a good strong run up to it, paused with a bit of a struggle here to get above the value of this long consolidation that lasted for a few weeks. And they now had this point of control area, which was acting as support, so eventually they did extend the range, and new buyers came to establish this area of value, and it proved to be strong enough to hold 3 or 4 tests, and they went back to get a little more testing of this same area again. Remember, this value area is held now for over a month, actually 5-6 weeks, and just a few days ago they probed a little through it one more time, but it had a value under it, and that brings us up to where we are. Now, again, this is going to be extremely valuable for our intraday trading, if which, you know, even if it doesn't happen this time, it's something that happens quite a lot in trading. Again, I'm not predicting, but I'm just expecting anything's possible, and it certainly is possible that we can finally get a little bit of a pullback on some very strong up move here. And so where do we look for it? Well, we've got this area of value was very strong for an extended period of time, a lot of rotation. And we have the point of control from that period right here. So there's a very strong area at 142.30, and right up here around 143 is another very strong area, that value area high, and a nice little gap here that they blew through so fast there wasn't much volume at all traded there. So that's another area that could possibly be tested pretty well. And then what we can always do are the tools so many people use. We can put up a Fibonacci on the most recent swing and find that the 62% corresponds nicely with this value area, and this point of control here is pretty close to that swing anyway. So that's another one. And we can look at it, maybe let's look at a Fibonacci from this low up to this high. We can do that as well. So now we see that we have a 38% here, pretty close to where we had the 618 in that same gap area. So this 142.80 to the 143 area is pretty strong. And the 50% of this whole swing up is right there on that point of control. And when you look down at the value area that we have right there, it's corresponding pretty well, getting pretty close to the 76%. So putting that all together, you can see how valuable it is to for intraday. When we start looking at 3-hour charts or 135-minute charts, we're going to have a lot of tools to pick our support and resistance, and that can be very helpful whatever time frame you're using on your intraday trading. So we'll look at that some more next.